estate companies are in focus after Indiabulls Real Estate demerged its business into two entities, commercial as well as residential. In fact, Indiabulls Real Estate rallied close to about 30% yesterday, but even the others like Unsold Property, today Peninsula Land, Nitesh Estates, they've all been surging. So today Mangalam Maloo has found out one gem in this real estate pack in his special segment, Bhavcopy. Mangalam?
Well, Rima, I was looking through all the real estate companies, and here's one real estate company which swam into my ken, which is Nesco, because it's got a market cap of 3,500 crore rupees. But you take a look at the company, it's a debt-free real estate company with annuity income. So it is a debt-free real estate company, which is the key positive there. It has 70 acres of land in Goregaon, Mumbai, just off the Western Express Highway if we drive down that side. And it generates annuity income from three revenue sources. The first one, it's got an IT park, so it leases it out to a lot of the IT companies. Secondly, it's got the Bombay Exhibition Center. We all have at some point attended some of the fairs out here. I personally do attend the Palm Expo Music Fair at the Bombay Exhibition Center. And it also has an hospitality as well as capital goods business, but that accounts for just 10% of its revenue. Going forward, talking about the promoter, Nesco was founded by Mr. Jetabai way back in 1939, and currently the promoter family holds 68% stake. Just earlier in November, the company had a new management change. Mr. Dibakar Chatterjee joined or was appointed as the CEO, and he's got 21 years of experience. So that was as far as the promoters and the management is concerned. But now take a look at the financials of this company. Over the last few years, from FY13, the revenues have grown from 144 crores to 250 crores in FY16 itself. And in the 9 months of FY17, they've done really 85% of what they did all of last year. And because it's an annuity income, their operational margins are fairly strong. So the company operates at 70% EBITDA margins. And in FY14, the company's margins dipped primarily because they were doing some sort of capex, and once the operating leverage kicked in, as of 9 months FY17, the margins have touched almost 80% at that 90% mark, 80% mark, 79%. And because the company is debt free, most of the operational gains go down to the bottom line. 81 crores PAT in FY13, FY14. And if you remember, FY13 revenues were 143 crores and FY16 net profit has equivalent to that. If you take a look at the revenue breakup, where does this come from? Half of it comes from the IT park, 40% comes from the exhibition center, and 10% from the capital goods division. The hospitality business has been growing fast to 2.2 crore revenue versus 6 lakhs. So small portion, but growing very fast. Now going forward, they have a huge capex underway. I was looking through their balance sheet. The capital work in progress is 200 crore plus, which is the highest in the last few years. And the majority of their revenue, which comes from the 3 IT buildings which are fully occupied, there the company is constructing the 4th IT building, which is worth nearly 17 lakh square feet. So this can add a formidable chunk to their revenues. And they're also extending their exhibition space by constructing nearly 15 lakh square feet of space. They also are increasing their hospitality business. They will serve nearly 15,000 meals per day in that hospitality large kitchen that they're forming. And finally, what I like is that the company in their press release has said that estimated cost of expansion is 1,500 crores, but this will be funded by internal resources, and the company is expected to remain debt-free going forward as well. So let's take a look at the valuations then. The 12-month trailing EPS has been 123 rupees, so the company trades at 20x trailing price to equity earnings. And it may be optically more if you look at it from a trailing basis, but remember the 10 years profit CAGR has been 24% and return on equity has been around that 25% mark too.